Okay, let's unpack this. Imagine building a fortune. I mean, a huge fortune, not by playing it safe, but by consistently betting on what pretty much everyone else calls impossible.
Yeah, it's quite a story.
That's really the extraordinary story of Vinod Khosla, isn't it? A name that's basically become synonymous with audacious risk-taking in Silicon Valley.
Absolutely. He's carved out this unique niche.
And we're talking serious numbers here. With a reported net worth of, what, $10.1 billion as of July 2025, according to Forbes. He isn't just an investor. He's really a pioneer.
A pioneer who seems to thrive on pushing boundaries, both technologically and, commercially.
Exactly. So our mission in this deep dive is to really explore how Khosla has masterfully transformed these high-stakes risks into billion-dollar startups.
Right.
We want to uncover the underlying principles of his unique approach, an approach that could very well redefine the future of venture capital itself.
It really could.
We've really delved into a stack of fascinating sources for this one, detailing his journey, his philosophy, and the surprising facts behind his remarkable success. So get ready to maybe rethink everything you thought you knew about risk and reward.
And what's truly fascinating here, I think, is how Khosla's success fundamentally challenges the traditional wisdom, the stuff that underpins most investing.
How so?
Well, most financial strategies are built around minimizing risk, right? Carefully hedging bets, seeking predictable returns, play it safe.
Standard playbook.
Exactly. But for Khosla, risk isn't some threat to be avoided. It's like the raw material for transformation. It's the crucible where groundbreaking innovations are forged.
So he runs towards the fire, basically.
You could say that. I mean, look at his track record.
Yeah.
From early, seemingly outlandish bets on companies that were, let's be honest, little more than audacious ideas back then.
Like OpenAI.
Like OpenAI, precisely. Or think about the plant-based meat pioneer Impossible Foods. His entire career serves as this masterclass in finding profound opportunity hidden within what looks like extreme uncertainty.
Okay.
So this deep dive will really illuminate how his distinct financial mindset, his strategic career path, his extraordinary habits, even his seemingly unconventional life philosophy, coupled with his unique approach to navigating crises, all allow him to actively shape the future instead of just trying to predict it.
Okay, so that raises a really compelling question right at the outset. How does someone pile up a $10.1 billion fortune by deliberately embracing situations that, most people would label as dangerous or even reckless?
It's at the core question, isn't it?
It certainly starts with a financial philosophy that feels almost paradoxical, like you said.
Yeah.
For Khosla, safety isn't a comfortable zone where innovation can flourish. He sees it quite literally as the most dangerous place to be if you're trying to achieve truly transformative breakthroughs.
Absolutely. And to truly grasp this, you really need to connect it to the bigger picture of his career.
Yep.
Starting with his initial kind of defining move when he launched Khosla Ventures back in 2004.
Okay, what happened then?
He committed an astonishing $1.5 billion of his own capital to the firm.
Wow. His own money. Not outside investors.
His own personal capital. Now, this wasn't just a large sum. It was seen as audacious, even outright reckless by many of his peers in Silicon Valley at the time.
I can imagine. What's the norm?
Well, the norm is, most VCs raise capital from limited partners of big institutional investors like pension funds, endowments. They're investing other people's money.
Right, which changes the risk calculation.
Completely. So the idea of placing such a significant chunk of your own personal net worth into a single firm, especially one dedicated explicitly to extremely high-risk, unproven ventures, it was, and honestly still is, truly unconventional.
So it was a statement.
A huge statement. A bold declaration that Khosla was operating by a different set of rules with a much longer time horizon and, frankly, a far greater appetite for personal exposure. It wasn't just strategic. It felt deeply personal.
But was it just gambling? Or was there a method?
Oh, definitely method. For Khosla, this wasn't blind gambling or hubris. He labels his targets high-impact science experiments, and that term is really key.
Science experiments,
Yeah.
not just businesses.
Exactly. These aren't just incremental improvements. They're not just slightly risky business ideas. They are ventures where the fundamental scientific or engineering premise itself is still being proven out.
Okay.
Yet if they succeed, they have the potential to redefine entire industries or maybe even fundamentally reshape how human civilization operates. Think moonshots.
Like the actual moonshot.
Kind of, yeah. The basic physics might be understood, but the engineering to actually get there is totally unprecedented. He's looking for technologies that aren't just better, but fundamentally different, exponential impact.
Okay, give us an example. You mentioned OpenAI earlier.
All right, OpenAI is a perfect example. His early investment came in 2018. At that time, the very idea of building a safe, beneficial artificial intelligence platform, well, it sounded incredibly idealistic to some, commercially unproven to most.
What were others investing in then?
The broader investment landscape was way more comfortable with established, more predictable sectors. Safer bets like enterprise, software as a service for businesses, predictable recurring revenue.
Got it.
Or consumer apps with clear, immediate ways to make money, already validated markets. The whole concept of an AI company focused on long-term safety and benefit rather than immediate profit.
Yeah.
It was viewed with significant skepticism by many, didn't fit the mold.
But Khosla saw something different.
He did. He saw an impending inflection point. He recognized this quiet but powerful convergence happening increasingly vast data sets, rapidly advancing computing power, and these profound breakthroughs in deep learning algorithms.
The building blocks were coming together.
Exactly. He viewed OpenAI not just as a company that might make a product, but as a potential cornerstone for an entirely new societal infrastructure. Like the internet itself became foundational.
Wow, okay. That's a big vision.
Huge. He wasn't just seeing a product, he was seeing the fabric of future society being woven.
So what's the core belief then? What lets him make these bets that seem impossible to others?
It boils down to a deep conviction. If a technology has the potential to positively impact billions of lives, it's inherently worth backing, even if the odds of success are incredibly small.
Because the payoff is huge if it works.
Exactly. The logic is that the potential upside from one truly transformative winner can overwhelmingly outweigh the cumulative downside from many, many failures across the entire portfolio. He's a big believer in the power law of venture capital.
The power law. Explain that a bit.
It's the idea that a tiny fraction of investments, the massive winners, will generate the vast majority of returns for the whole fund. They make up for all the ones that fail.
So like one Google makes up for dozens of flops.
Precisely. Think about it. Out of maybe 50 investments, maybe 40 completely fail, 5 return just the initial capital, 4 give modest gains. But that one game changer, that single OpenAI or Impossible Foods, could easily account for 80–90% of the fund's total returns.
So it's not about batting average.
Not at all. It's about hitting grand slams, and that means you have to swing for the fences, even if you strike out a lot.
Which directly challenges how most VCs operate. Right? They try to smooth things out.
Totally. Standard VC often aims to smooth out volatility through broad diversification, betting on many slightly above average companies, hoping for incremental but consistent returns. Khosla. He actively embraces volatility.
He sees it as necessary.
Necessary turbulence before truly transformative change can happen. He's remarkably comfortable with the reality that most of his bets will fail, precisely because the ones that succeed will return the fund many, many times over.
That takes a certain stomach for failure.
Absolutely. He understands that if you're trying to do something genuinely groundbreaking, the path will inherently be uncertain, full of setbacks, high probability of failure on individual projects.
So in his world, risk isn't the enemy.
It's the opposite. Risk isn't a hazard to be avoided. It's the raw material for breakthroughs, the essential ingredient. Without it, true innovation just doesn't happen.
And money becomes what? A tool.
An instrument for bending the future towards these audacious possibilities. It's more than just value. It's leverage on reality. This mindset explains his consistent, almost unwavering investments in frontier sectors.
Like AI, clean energy.
AI, clean energy, advanced robotics, biotechnology. Often long before they are considered safe or mainstream by the wider investment community. He's not waiting for validation.
He's helping create the market.
Exactly. It's not just being contrarian for the sake of it. It's a calculated rejection of the comfort zone, favoring shaping the frontier, because that's where the world's most valuable companies and profound societal changes are actually born. He's betting on the world as it could be.
That's a profound way to look at it, seeing risk as a constructive ingredient, not just something to minimize. Okay, so we've seen how his financial philosophy turns conventional wisdom on its head. But how does that daring mindset actually play out in the arc of his career? It's not just about the money, right? It's how he actively shaped industries. And that journey, surprisingly, began way before he became a VC.
Precisely. His career strategy is like a natural extension of that financial mindset. Before he was this daring VC, Khosla co-founded Sun Microsystems. We're talking way back in 1982.
Sun Microsystems, okay. Big deal back then.
Huge deal. And it wasn't just a successful company. Its technology, notably the Java programming language, became absolutely foundational to the internet as we know it.
Java, really? How so?
Well, Java offered this write once, run anywhere capability, revolutionary for software development back then. It let applications function across different operating systems, different hardware. It laid crucial groundwork for the whole digital world we live in now.
So he saw the power of foundational tech early on.
Exactly. That early experience solidified his belief that truly transformative impact comes from reimagining entire industry architectures, not just making incremental tweaks. He learned firsthand. The biggest opportunities lie in building those foundational layers that then enable countless other innovations on top.
Okay, so Sun Microsystems, then what?
After nearly 2 decades at Kleiner Perkins, which was, one of those famous VC firms ever, he launched Khosla Ventures in 2004.
And why start his own firm?
He saw a gap in the market. While many firms were looking for safer, more predictable growth or investing where markets were already established, Khosla wanted to aim for the moonshots.
The science experiments again.
Right. Those ventures that others dismissed as too speculative, too impractical, or just way too early. He wanted to fund the true frontier, where the challenges were immense, but the potential upside was literally world-changing.
So his strategy was clear from the start.
Crystal clear. Identify sectors ripe for fundamental disruption where existing solutions were inefficient, maybe unsustainable, or just couldn't meet future demands, and then make bold early bets on the company's best position to lead that disruption.
So he wasn't trend following, he was trend setting.
Exactly. It's not about identifying a trend and riding the wave. It's about identifying a nascent possibility and pouring resources and conviction into making it a tangible reality.
Which led him to some interesting and definitely not safe bets.
Incredibly diverse range of companies that were far from safe when he invested. Think clean energy startups like LanzaTech. They faced complex biochemical engineering hurdles, trying to convert waste gases into sustainable fuels, huge challenge.
Right.
Or Impossible Foods. They had to literally invent a new food category, tackling deep scientific problems to mimic meat from plants, and then overcome massive consumer skepticism and regulatory hurdles.
And things like DoorDash.
Delivery disruptors like DoorDash and Instacart, they basically reimagined local logistics, building entirely new, hyper-efficient networks from scratch. Massive operational and scaling challenges there.
And fintech, too.
Yep, fintech players like Affirm, offering new, more transparent models for consumer credit, going up against established banking giants. Each of these was fraught with execution risk, regulatory uncertainty, huge tech hurdles when he first invested.
But for him, that was the point.
That was the point. By getting into a sector before it's fully formed, before the conventional wisdom solidifies, he could actively help shape its direction. And then claim disproportionate rewards when the market finally caught up and validated his vision. He's a shaper, not a follower.
And he offers more than just money, right? You hear that a lot.
Oh, absolutely. He often says the most valuable thing he offers entrepreneurs isn't just the capital. It's the willingness to stand by them when failure seems imminent.
When everyone else is running for the exits.
Exactly. When critics are loudest, or when the initial plan just hits a brick wall, he encourages radical pivots, bold experiments that conventional investors, with their shorter timelines and aversion to risk, would simply avoid or even penalize.
Because new ideas rarely work first time.
He gets that.
Yeah.
Truly new ideas require iteration, resilience, a consistent belief in the ultimate goal, even through periods of intense doubt. With Impossible Foods, for example, he didn't just fund them. He actively engaged with the science team, challenged their assumptions, supported their pursuit of genuinely novel solutions, not just incremental improvements.
That must build incredible trust.
It fosters a profound level of trust, which in turn grants him access to the most ambitious founders in these frontier fields. Founders tackling huge problems, Khosla is one of the few who will not only get their vision, but will stick with them through the tough times.
And each success reinforces that.
Absolutely. Every successful exit, DoorDash, Affirm, Impossible Foods impact adds to his net worth, sure, but also massively strengthens his reputation as the go-to investor for radical ideas.
Yeah.
The guy who gets it when no one else does.
So it's a cycle.
A self-reinforcing cycle, investing in the future, actively helping create it, then reinvesting the returns to the next frontier. He's built his wealth by proving the biggest opportunities are where most only see risk, and by actively helping navigate those risks long-term.
That's fascinating how his strategic approach goes beyond just the sector or the tech, right down to the people themselves. It sounds like Khosla believes the real DNA of a billion-dollar startup isn't just the brilliant idea or the breakthrough tech, but fundamentally it's the team building it.
That's exactly right.
So what kind of people does he actually look for? Because it sounds like it might not be what you'd expect from a typical VC.
It's often not, and this really brings up an important question about talent scouting, especially in these really uncertain frontier areas. While many investors, they look for polished resumes, degrees from fancy schools, long track records of success in established industries, Khosla zeroes in on something much less tangible.
Which is?
The capacity to learn, to adapt, and to reinvent themselves and their business at a pace that fundamentally outstrips competitors.
So not past achievements, but future adaptability.
Precisely. He gets that in uncharted territory. Past success in a stable field might not mean much. What really matters is the agility to navigate constant, unpredictable change.
Is there a way he tests for that?
Well, in a 2025 conversation with GeekWire, he actually pinpointed the single most important decision for a startup founder, assembling the right team. And his litmus test for evaluating that team is deceptively simple, but really revealing.
Okay, what is it?
He'll ask founders, how much has your thinking changed in the last 3 months?
Interesting question. Not what have you achieved, but how have you changed?
Exactly. It's not a trick question. It's a direct probe for intellectual flexibility, for the willingness to abandon cherished assumptions, even deeply held beliefs about their own product or business model when they're confronted with better evidence or new information.
Because things change so fast in these fields.
Incredibly fast. For Khosla, rapid adaptation isn't just nice to have, it's a fundamental survival requirement. Especially in frontier markets where the science can shift in weeks or market feedback can just obliterate entire strategies overnight. A team that can't pivot quickly is simply doomed.
He wants intellectual humility plus execution.
Perfectly put. He's observed time and again that the initial business plan, it rarely, if ever, survives intact. It's often just a hypothesis, a starting point.
My first draft?
The first draft of a potentially world-changing idea. A startup's long-term trajectory depends far less on the elegance of that initial plan and much more on the team's ability to rewrite it, iterate on it, even scrap it entirely without hesitation when reality demands.
So the map is constantly being redrawn.
Constantly. It means being nimble, not rigid, viewing every challenge as an opportunity to learn and evolve.
Which is why he backs unconventional leaders sometimes.
Exactly why. He favors founders who treat every obstacle not as a reason to retreat or despair, but as a prompt to re-engineer the business or the tech or the go-to-market strategy. They see problems as design challenges.
Okay.
This explains why many of Khosla Ventures' most successful investments were led by these unconventional leaders, people who might not have been the safe corporate hire with a traditional background, but who were absolutely relentless in pursuing solutions. No matter how many tries it took or how much received wisdom they had to ignore,
They think differently.
they think and operate differently, willing to break molds. And he doesn't just fund them and walk away. He's known for providing sustained, often intensely challenging mentorship,
Pushing them.
actively pushing portfolio companies to rethink strategies before the market forces them to. He acts like an accelerant for their learning process, pushing them to embrace discomfort, constantly question their own assumptions, even when things seem okay.
And that shapes the company culture.
Profoundly. He believes a startup's culture should reward curiosity over credentials, experimentation over ego, and evidence over tradition. These values create this powerful innovation feedback loop.
How does that work?
Well, more experiments lead to more learning. More learning leads to faster evolution. Faster evolution makes it incredibly hard for competitors to catch up. It builds a real moat.
Can you give an example?
Sure. Say a team launches a new feature and the data shows low adoption. A Khosla-backed team wouldn't just tweak it slightly. They might question the fundamental user need assumption, run 10 new A/B tests, maybe even completely redesign the product from scratch, all within weeks, not months.
Wow, that's fast.
It has to be. In Khosla's world, billion-dollar outcomes aren't the product of static genius. They're the result of dynamic, rapid learning, executed by teams that treat change as a profound competitive advantage, not a threat. They seek change out.
So beneath the flashy tech investments.
The quieter, maybe more profound truth is that Khosla bets on people before products. And for him, that adaptability, that learning engine, That's actually the safest risk of all.
It certainly seems like all these strategies and habits, the audacious investments, the focus on adaptable teams, they're all deeply rooted in a much bigger conviction about the future itself. It feels like Khosla's entire life philosophy is built on a belief that really separates visionaries from trend followers.
I think that's right.
He doesn't seem to try and forecast the future. He's actively participating in inventing it. And this is where it gets really insightful, I think.
Indeed. If we connect this back to the bigger picture, where most investors start with loads of market data, customer research, competitive analysis, trying to spot existing trends or opportunities.
Right. The standard approach.
Khosla starts somewhere else entirely, with an almost philosophical, imaginative question. What would the world look like if this idea succeeded completely?
Not how big is the market now, but what could the world become?
Exactly. He's envisioning a future where the seemingly impossible has become normal. He projects himself into that imagined future, say, a future where meat is grown in labs, or energy is totally clean, or AI is a universal co-pilot for human knowledge.
And then works backward.
Then works backward to figure out if the path to get there, however unlikely or difficult it seems now, is actually worth pursuing. He's less interested in incremental improvements. He wants fundamental reinventions.
Solutions that rewire society.
Literally. Rewire how society operates, solve problems that seemed intractable, maybe for generations. That's why his portfolio is packed with companies tackling massive systemic challenges.
Like the ones you mentioned. Energy, food.
Alternative energy to replace fossil fuels entirely, not just reduce use. Synthetic biology to revolutionize manufacturing by engineering living systems. AI to reshape knowledge work. Precision medicine to transform healthcare from reactive to proactive, personalized wellness.
These are huge long-term bets.
Decades-long visions, often. Each bet reflects his willingness to commit not just capital and reputation, but crucially his time, to these visions that might take ages to fully realize and scale globally.
And he actively pushes against consensus thinking, right?
Very actively. He often contrasts his approach with consensus thinking. He argues, pretty convincingly, that if a room full of experts, no matter how smart they are, all agree something will work and is a great opportunity.
It's probably too late.
It's probably too late for extraordinary returns. By the time an opportunity is obvious and universally accepted, the market has already priced in most of the upside. Competition is fierce. The path is crowded.
So he looks for the opposite.
He looks for what he calls non-consensus, right? Opportunities. Ideas that are widely dismissed, maybe even ridiculed, but are still grounded in sound science or innovative engineering.
How does he get the confidence for that? It's not just optimism.
It's not blind optimism. It stems from a deep understanding that truly transformative change rarely comes from popular opinion or accepted frameworks. It almost always starts at the edges, from ideas initially scoffed at before they change everything. So the question for him isn't, is this popular? It's, is this scientifically sound, and could it be truly revolutionary?
That contrarian approach is clearly central, but I imagine some listeners are wondering, how do you tell the difference between a truly non-consensus right idea and one that's just non-consensus wrong, basically, a bad idea that happens to be unpopular? Is there a secret sauce there, or is it just accepting a higher failure rate?
That's an excellent question, and it really hits the core of his strategy. And yes, he absolutely accepts a higher failure rate, but it's not just that. His discernment comes from incredibly rigorous analysis of the underlying science and engineering. Plus, he leverages his deep network of scientific advisors. It's not just about finding any unpopular idea, it's about finding an unpopular idea with a plausible, even if incredibly difficult path to a scientific or technological breakthrough. He's looking for fundamental truths or new capabilities that haven't been fully exploited or widely recognized yet.
So there's deep diligence behind the contrarianism.
Absolutely. Now, this contrarian streak, while it's responsible for his huge success, definitely has a cost. Many of his investments will fail. And some critics, looking only at the ones that don't make it, might see his portfolio as, a graveyard of overhyped, impractical ideas.
But that's not how he sees it.
Not at all. He sees those failures not as losses to mourn or mistakes to avoid, but as tuition paid to the school of invention. Yeah, necessary learning experiences. Experiments that provide valuable data, insights, lessons, even when they ultimately fail. Without them, the monumental wins that define his career. OpenAI, Impossible Foods, DoorDash, they just wouldn't exist. He knows you can't get the breakthroughs without making countless attempts, and many attempts will naturally fall short.
So it's ambition plus acceptance.
A blend of profound ambition and pragmatic acceptance. Ambition to relentlessly shape the world as it could be, always pushing boundaries, and a calm acceptance that most attempts along that tough path will fall short.
So the measure is interdiction.
For Khosla, the ultimate measure of a life well lived isn't how accurately you predict the future. He thinks that's impossible anyway. It's about how boldly and actively you build it, knowing that even partial success from one of these ambitious ventures can leave the world significantly better. Be an architect, not just a commentator.
It really sounds like his influence, then, isn't just a side effect of his wealth, but it's more like a strategic tool he actively uses to accelerate these big systemic changes. How does a billionaire investor actually use his power, his gravitas and his network, to drive these profound shifts?
That's a really critical insight because Khosla definitely views his $10.1 billion net worth, plus his decades of experience navigating Silicon Valley, as way more than just capital.
It's credibility.
It's a rare kind of credibility and leverage. It opens doors in government, in academia, in the top scientific circles, doors that are just closed to most people. He doesn't just write checks. He brings this unmatched gravitas, this reputation for understanding truly disruptive innovation.
And his venture assistance.
Right. His philosophy of venture assistance goes way beyond just advising startups on business strategy. He actively uses his huge network and his significant authority to amplify ideas that might otherwise stay stuck in niche labs or obscure research papers or early prototypes struggling for attention. He's like a powerful megaphone for breakthrough science.
Can you give examples of that amplification?
Yeah, look at his backing of companies like Impossible Foods. Beyond the tech hurdles, they faced massive societal and regulatory fights trying to shift ingrained eating habits.
Right.
Or LanzaTech, operating at the cutting edge of industrial biotech, needing collaboration with heavy industry regulators. Or QuantumScape, trying to revolutionize batteries, a field full of skepticism after past failures.
These aren't just about market share.
Exactly. These companies aren't just aiming for an IPO or market share. They seek to fundamentally redefine entire sectors tied to critical global challenges: climate change, food systems, energy storage. Khosla gets that the stakes here are far bigger than just financial valuations. It's about building the actual infrastructure for a more sustainable, healthier, maybe more equitable world.
So how does that shape where he puts his influence?
Well, instead of chasing the highest profile, already validated deals, the ones everyone else wants, he often champions these really early-stage projects. Projects that, while super promising, need a long runway of credibility and sustained support to attract funding from more conservative sources later on.
So he de-risks the story.
He effectively de-risks the narrative. By attaching his name, his reputation, his firm's backing, he signals, this isn't just a wild idea. This is deeply thought out, scientifically sound, with transformative potential. That makes it much easier for other, more risk-averse investors to follow. He provides this crucial stamp of approval, often when a company might otherwise just struggle to get traction.
That's powerful. But does he worry about becoming a gatekeeper himself? Influence can cut both ways.
He's so acutely aware of that shadow side. The risk of influence hardening into gatekeeping, where a small, powerful circle inadvertently dictates what innovation gets pursued and what gets ignored. He knows concentrated power, even if well-intentioned, can stifle real disruption.
So how does he fight that?
He actively works against it by seeking out founders from unconventional backgrounds, people who maybe didn't go to the right schools or work at the right companies. He funds ideas that might not fit that polished, conventional pitch deck mold that most VCs love. He looks for raw, unconventional genius, often hiding in plain sight.
He said something about people not knowing something can't be done.
Yeah, he famously said great ideas often come from people who haven't yet learned why something can't be done. It's a powerful reminder that influence should be used to widen the path for others, lower barriers for innovative thinkers, not narrow it down to a select few.
So his impact is broader than just his portfolio companies.
Much broader. It's visible in the companies he funds, sure, but also in the wider conversations he shapes. From advocating for AI safety in policy circles to publicly challenging the agricultural industry's dependence on livestock. In Khosla's world, power isn't about domination or control. It's about setting the stage where the improbable gets a legitimate, well-funded shot to prove itself.
So the investments might be high risk.
But his use of influence is deliberate, long-term, and aimed squarely at rewriting the rules of what's possible on a global scale.
That's a really powerful and, frankly, responsible way to wield influence. Now, this deliberate use of influence and his deep commitment to these long-term visions, that must get put to the ultimate test during periods of intense market volatility, right? How does Khosla navigate the inevitable crashes and corrections that follow booms, like, say, the current massive buzz around AI, without losing his conviction or, well, his shirt?
It really is a masterclass in long-term resilience. Back in August 2025, during a pretty candid conversation on Nikhil Kamath's podcast, Khosla actually warned that we are indeed living through an AI bubble.
He said that publicly?
Yeah, and that most investments will lose money. But his tone wasn't alarmist, not panic. It was more like a calculated anticipation, historical perspective.
So he expects bubbles.
He sees them as unavoidable, almost cyclical parts of innovation cycles. They tend to happen when truly transformative technologies, think the internet in the late 90s, clean energy in the 2000s, AI today, cross into mainstream awareness.
And the money flows in too fast.
Speculative capital pours in much faster than the underlying infrastructure or the real-world applications, or even profitability can actually support. So you get these inflated valuations that detach wildly from fundamental value.
And these bubbles burst, destroying portfolios.
They can destroy short-term portfolios, absolutely. Widespread losses for investors caught in the hype. However, Khosla believes they also simultaneously create the precise conditions for long-term dominance.
How so?
If you have the discernment to identify which companies are building real, defensible applications, fundamental tech breakthroughs, rather than just riding the hype wave, the downturn acts like a necessary cleansing. It shakes out the weak players, the fakes.
So he keeps investing even when he sees a bubble, like with AI now.
Exactly. This thinking explains why Khosla Ventures continues to back AI startups even amid these inflated valuations, despite his own warnings. Their focus stays squarely on those with truly defensible tech proprietary algorithms, unique data sets, novel architectures,
and the right talent.
Deep technical talent that can execute complex visions and clear paths to scalable, real-world impact that can actually survive a market correction. They're looking for the substance beneath the froth, knowing the real breakthroughs will endure.
And he's done this before.
He applied the exact same reasoning in other sectors where hype outpaced reality. We saw it dramatically in clean energy in the late 2000s. Many overvalued companies failed. Same thing in client-based food in the early 2020s. Big correction after the initial euphoria.
And what did he do then?
In both cases, he weathered the downturns by steadfastly holding onto positions in companies he believed had enduring value propositions, patiently waiting for the market to rediscover their worth. He didn't jump ship. Often, he doubled down, knowing the strong would survive and thrive.
Thinking in decades, not quarters.
That's his mantra. He measures success in decades, not quarters. And he's remarkably comfortable with multi-year stretches of being perceived as wrong by conventional investors focused on short-term gains.
But that patience is strategic.
Deeply strategic. Because the few companies that survive the inevitable market crash often emerge with significantly stronger market positions. They've shed weaker competitors. They have a clearer, less distracted path to profitability and market leadership. The crisis acts like natural selection.
Proving out the real value.
Exactly. So his crisis strategy really hinges on two core principles. First, accept that losses are inherent, unavoidable in pioneering new fields. That's the cost of admission, the tuition.
Right.
And second, ensure that the potential upside of just one survivor, one of those world-changing companies, more than compensates for all the cumulative failures across the portfolio.
He has an analogy for this, doesn't he?
Yeah, the orchard analogy. He compares venture capital to planting an orchard, not betting on a single harvest. Most seeds won't grow into mature trees, but the ones that do, they'll bear fruit abundantly for decades, making the whole enterprise worthwhile. The few magnificent trees make up for all the seeds that didn't sprout.
So navigating crises isn't about predicting the crash.
He thinks predicting the exact timing is futile, distracting. Instead, it's about ensuring that when the bubble bursts, you are holding the few companies that are truly strong enough, resilient enough, fundamentally important enough to define the next era.
That long game resilience.
That's what allows him to turn periods of widespread fear when others pull back into some of his most lucrative and enduring wins. He sees volatility not as a threat, but as an opportunity for consolidation and ultimately deeper value creation. So when you boil it all down, Vinod Khosla's remarkable journey really distills into this central kind of counterintuitive truth. Bold investing isn't just reckless gambling. Instead, it's the disciplined pursuit of asymmetric opportunities. Those rare chances where the potential upside is so incredibly vast, so transformative, that it just overwhelmingly eclipses the cost of repeated failures. His $10.1 billion fortune, it isn't the result of perfectly avoiding mistakes. It's the result of courageously accepting them as the necessary tuition for discovery, for pushing the absolute boundaries of what's possible.
Right.
He has consistently shown time and again that the investor who can truly stomach volatility, resist that pull towards consensus thinking, and genuinely think in decades rather than quarters. That investor will not only capture extraordinary financial returns, but will also leave an indelible, enduring mark on society itself.
So what does this all mean for you listening, whether you're an entrepreneur grappling with a truly audacious idea, maybe an investor looking for genuinely overlooked opportunities, or perhaps just someone curious about how the future is actually being built one bold bet at a time?
Yeah, what's the takeaway?
The profound lesson here, I think, is as much about mindset as it is about how you allocate capital. It's about seeing risk not primarily as a danger to be minimized or a problem to be solved, but as raw potential to be shaped into breakthroughs.
Shifting the perspective on risk.
Exactly. It's easy, maybe even comfortable, to join the crowd when a future feels certain, when everyone is piling into the same seemingly safe bets. But the real rewards, both financial and societal, the truly paradigm-shifting innovations, they belong to those who have the courage, the conviction, and that strategic patience to fund and build the uncertain futures that are actually worth believing in. And so the question really becomes personal, doesn't it? Are you willing to back a vision you can't yet fully see, but in your gut you deeply believe in? Thanks for joining us on this deep dive.